it's inevitable that the largest banks in the world, some you've mentioned in your question, will be offering crypto services this year.
This episode is brought to you by Uphold, which is a great crypto platform that I've been using since 2018. Uphold makes it easy to buy, sell, trade cryptocurrencies like Bitcoin and altcoins. In fact, they have 300 plus cryptocurrencies on their platform, and they carry precious metals such as gold and silver, and you can swap between these assets. So it's really unique. Uphold is safe and reliable. I've never had any issues with them, and they are 100% reserved. You can review their transparency report. They don't commingle or lend out your funds. Now, Uphold recently launched a great product called Uphold Rewards, and it's packed with many benefits. You can earn up to 5.25% on stablecoins, get 24-hour early access to new token listings, and unlock exclusive crypto insights. And they support a variety of stablecoins, such as PYUSD, that's PayPal stablecoin, Circle's USDC, and USBC. They will be supporting Ripple's upcoming launch of RLUSD. So this is a really great rewards program. And if you'd like to learn more, please visit the link in the description. Welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and joining me today is David Mercer, who's the CEO of LMAX Group. David, great to have you on.
Hey, Tony, good to be with you today.
David, I'm excited to speak with you. I followed LMAX over the years and your journey towards digital assets, of course. And David, you have a plethora of experience in the markets. So I have a lot of questions for you and where you see things going. But before we get to all of that, tell us about yourself. Where did you grow up? How did you get into finance?
Wow, that's a long story. So I was born and bred in Belfast, Northern Ireland, believe it or not. I left the Emerald Isle when I was 12 years of age and arrived in London. So I guess my formative years were in London. I've been in London ever since. And then the sort of journey into capital markets went via accounting firms such as EY. I spent a decade in investment banking at Credit Suisse, moved through various brokerages, and then arrived at LMAX Group in 2011. Initially, I was a sort of hired gun at LMAX Group. And then there's a famous advert, and I did the advert, which is we bought the company in 2013, so 12 years ago. And we've just carried on from there. But so I guess my whole working career has been in capital markets, particularly fixed income emerging markets, where I learned everything that we do today. And I'm probably doing exactly what I should be doing after 30 years in the market. So that's how we've arrived here today, Tony.
And, with your experience in capital markets, what was your first encounter with Bitcoin and what was that moment like for you? What was your aha moment when it clicked for you that this was different?
Great question, but I'm not sure we've had an aha moment for me. Perhaps we launched LMAX Digital 2018. We started thinking about it in 2017. In 2013, it was presented to us first at what we call a brown bag lunch, and we didn't do anything with it. And in fact, we launched another asset-backed digital coin first in 2014. We didn't get any traction. None of our institutional clients wanted to trade it, so we sort of dismissed it, and I watched Bitcoin from afar. Then 2017, a whole bunch of our proprietary trading firms. So, all the biggest banks in the world trade with us. All the largest prop trading firms trade with us. And a few of them started saying, hey, we need some institutional grade infrastructure to transact this new digital asset. Can you do it, David? So we went and had a look, and we went from field to fork, or from origin of idea to live launch within 6 months. So I guess no eureka there. It was just a case of this is another market for us. At LMAX Group, we run 6 exchanges. LMAX Digital was the latest at the time. That was 5th at the time. The small eureka for us was that it was the fastest growing exchange I ever built.
Wow.
We got to break even within 6 months. I mean, other exchanges typically take 3 years, 4 years to get to break even. As a company, I guess that took us 4 years. So LMAX Digital took 6 months. So there's a little bit of a eureka moment there. I think it's a constant small gains you see in the digital asset world or the crypto world at the moment. So perhaps for me, the most recent one was just 2 months ago in Singapore, paying for a meal and a bunch of drinks with a Meta-based credit card, right? Which only had Ethereum on it. So paying a bill that came in Sing dollars with Ethereum via a crypto-backed credit card. Again, that was sort of the thing that made me go, "Oh, this is really real." And the hospitality, the bar, the restaurant, they were unaware of what I had on this credit card. For them, it was just a MasterCard. So that was probably the most recent one, which has been close to Eureka, that made me think that digital assets, crypto assets can pervade everything we do through all our walks of life.
And what are your thoughts on how this asset class has matured? Because it started with Bitcoin and then came other blockchains like Ethereum and so on and so forth, with proof of stake and smart contracts. And now we're seeing the move towards tokenization, putting traditional assets like stocks and other commodities on the blockchain, which will allow 24/7 trading, fractionalization, more global markets and things like that. What are your thoughts on the direction things are heading to?
The direction is inevitable. So there will be a convergence of traditional assets and digital assets or crypto in the decades ahead. I think the evolution to date has been slow. As an industry, we've got to challenge ourselves, right? We need to do better. So within LMAX Group, I straddle the two. So if you like, I've been trying to drive this convergence. I've been ready for this convergence for 7 years, since 2018. I mean, still to this day, 90% of my volume are in TradFi assets. So mostly we trade currencies or fiat currencies. So, last week with all the tariffs going on, or certainly through the month of April, we would trade $50 billion a day. Now, only 10% of that, not even 10% on those given days, would be crypto assets. So, but my strong, long-held view is that by the end of this decade, 10% of traditional assets will be tokenized. Now, what does that mean? It means you're talking about a market the size of $25 trillion, so slightly bigger than the market cap of gold today. Put that in perspective, the total value of crypto today is just short 3 trillion. So I fully expect that to happen. And once that happens, there's absolutely no reason, nothing that can stop this going all the way so that 80% of the world's assets are tokenized by the end of the next decade. I mean, it's just inevitable because of the reduction in friction which exists today. And that's what's going to happen with the like of tokenization, with fractionalization, with the fungibility of collateral, the ability to trade 24 hours a day, 7 days a week. It's just inevitable. Everything we've done, everything we do in markets at the moment, in traditional markets, is quite clunky. Don't get me wrong, I've been in them for over 30 years, and they're way less clunky than they were when I started in the 90s. All we've ever done over the last 30 years is increase market access. Blockchain, tokenization are the next steps on that path to greater democratization of the markets and more inclusive market access. And I think that tokenization, digital money, digital collateral will just accelerate what we do day to day, and, if you like, amplify all of the excellence we have in capital markets today.
So do you see, along the lines of what you mentioned, the opening up of more liquidity, the financialization of certain assets that couldn't be financialized before, and then with DeFi, people being able to transact with each other globally like they never have before. So if someone's in Germany and they want to borrow some, I don't know, the crypto assets or digital assets, I can facilitate that. They don't necessarily have to go to a bank.
It's just going to be seamless. I mean, look, I don't know whether I'm not going to sit here today and say that we are going to disintermediate the banks, right? The biggest provider of credit in the world today are banks, right? Everyone who owns a house needs some leverage. So it is possible, a bit like crowdfunding. It is possible you can have that crowd staking, crowd leverage. It's quite expensive today. I mean, ultimately, the best lenders, well, are governments, but after that are banks who will analyze credit ratings. So I still think you need that leverage in the system, but certainly breaking down the friction in markets, being able to easily move from one asset to the other or to earn an income, to earn interest on any asset, that becomes enabled by blockchain and by tokenization. So, I think at the moment, the problem is we have to pre-position our assets days in advance. I mean, to be clear, I mean, if you want to buy, move into a new asset class and buy a new ETF, you have to pre-position your assets. It's going to take you onboarding plus positioning your collateral. It's going to take you 5 to 7 days. The reality is when we have fungible collateral, when we have digital collateral, when we have a market where institutions will accept digital dollars, Ethereum, Bitcoin, where ownership can be transferred, at the sort of not instantaneously, as everyone says, but within a matter of seconds and within a matter of minutes, then suddenly you're going to see much more fluidity in the markets. And that's all we've all been looking for. And what happens with that, by the way, is that all markets will benefit. So, I'm in a foreign exchange market that trades $7 trillion a day. That's doubled in the last decade. Guess what? It's going to double again in the next decade. It just might be that a lot of the underlying will be digitized. So it'll be digital euros, digital dollars, digital yen, and the like. So absolutely what we're doing together is breaking down the friction that exists in markets. But I just want to say one thing to all the crypto evangelists out there. We need to do a better job. It's still really small, right? Gold by market cap has outstripped crypto over the last 5 years in terms of the market capitalization, right? So gold today is over $20 trillion. Crypto is still 3. So, we need to do a better job of showing the use cases for crypto, for digital assets, and for tokenization. But what I want to say at the end of this is that we are huge believers at LMAX Group that tokenization is inevitable and is the future of capital markets, and you will see a fusion of the two by the end of this decade.
And David, do you believe that part of the utility and like you mentioned, the use cases that have to be put out there, we have to do a better job, was the lack of clarity from the governments around regulations, because certain institutions may not have wanted to touch this because they're risk averse. We don't know if this is going to get clarity. We don't know if this is going to get banned. But now that things are opening up here in the United States where I'm at, Congress is working on legislation. We have a more favorable environment. In the EU, you have the MiCA regulations, and the UK, I believe they passed some regulations. Things are starting to get clearer now. Once we have those things set in stone, it may kick off adoption like we've never seen before.
It needs to. Simple as that, Tony. It absolutely needs to. It was somewhat of an excuse, but the lack of a framework never helps the growth of an asset class, right? By the way, fighting the existing regulators is never a good place to start either. But I think certainly the US was anti-crypto. But let's look at if you look at the history of Bitcoin, going back to Silk Road, you look at some of the bad actors, some of the convicted felons we've had within crypto, that hasn't helped.
Right.
You're trying to convince, you're trying to convince this. The way I look at it is I'm trying to convince $220 trillion of TradFi assets to move to this new world of digitization, of tokenization and digital assets, right? Having a couple of get rich quick bad actors, being the spokespeople for this new asset class wasn't a great thing. I think the new administration in the United States should help. But then, more importantly, after that, the industry needs to create infrastructure and product that the if you like, the centers of capital want to invest in, right? So we're going to talk, no doubt you're going to ask me about ETFs and things like that, but you must remember something, right? The fastest growing ETF of all time is the Bitcoin ETF. It's about $40 billion. That's tiny, right? It's really big in ETF land, but I look at the $220 trillion of TradFi assets again. I look at the $3 trillion of crypto. And I'm saying, well, how important is 40? So we've got to keep creating products that are accessible, that people want to trade. And if you like, back to one of your earlier questions, we have to create those use cases. Let's get the frameworks established. They're not established in the United States just yet. They will come. I'm sure of that. We have a better structure or a better think tank in 2025 than we had in 2022, 23, 24. Good. I think the same is true in the EU. I think there are some forward-thinking regulators in Asia, like the MAS, likewise in the Middle East. So I think those global frameworks being established will help the asset class to grow. And then, as an industry, we have to demonstrate that we can act within those guidelines, right? And let the industry thrive. Because, one of the big things, there's three things regulators have to do. One, protect consumers. To be clear, within crypto, we did not protect consumers, right? Yeah. Look at those bad actors. Look at the things that happened in 22 and 3. We did not protect consumers. So we need that regulation. The second bit is they have to create a wholesale framework. And the third thing is they have to harness innovation. Okay. So I think what we did a little bit in crypto is innovate without protecting or creating the framework. I think now we have a structure that will allow it to happen, and then we must innovate. We must innovate, and we must demonstrate the convergence of TradFi, DeFi, crypto, digital assets, and show the benefits of the digitalization of markets going forward. So I think, to answer your question, in short, we have a better opportunity now than we've ever had.
And David, what do you think about this? I kind of see the crypto startups as almost being the kids. To your point, they didn't have their I's dotted and their T's crossed for everything. FTX commingling of funds and all that nonsense, right? But the Wall Street firm, the banks that you work with and things like that are here. They have the knowledge, they have the infrastructure, they have the pedigree to come set up the ETFs and do the proper custody and all these things. They're going to be the ones to kind of lead the charge in creating these financial products and things like that.
You can be careful. I suppose we have to be careful about not disenfranchising either group. And I think both groups need to put their egos in a drawer to a certain extent and take the best bits from both sides of it. I think an LMAX Group we're fortunate because we work in TradFi. We operate with all the world's biggest banks, prop trading firms, all the biggest asset managers in the world, and hundreds of brokers. And then we work with a lot of crypto native firms. So I think it's not a case of, I do hear some institutions talking about pushing, as you just said there, using that phrase, pushing the kids out. I don't think that's true, right? Derivatives were built, back in the 90s when I started, derivatives were built by the latest rock stars, the latest engineers, the latest scientists. I think that's true in crypto today. So, I look at people who are running the digital side of our business, or some of the more forward-thinking parts of our digital business here, and they're in their 20s. That's the demographic. They're computer engineers, and I think we have to let them have their way. We have to let them show us the way in many ways. But there are things we can learn from TradFi that work. So let's use that plumbing. For example, you said it first there, Tony. Let's have separation of function. Let's have segregation of funds, right? I'm a little bit dismayed within the crypto industry even right now when I see brokers pretending to be exchanges, when I see exchanges wanting to be custodians. And I don't know why they want that to be the case, right? You have to have that separation of function and that segregation of funds. It's for a reason. It protects consumers, it protects the market, and it also allows specialization in every part of the market. So let's take the best bits from both of the markets. Let's have that true fusion. And I think together we end up with a much better, more accessible capital market structure than we have today.
Yeah, well put. Tell us a bit about LMAX Digital's services that you provide to the banks and institutions that you work with.
So look, I'm going to take you back a step and say LMAX Group operates exchanges. We match buyers and sellers. Simple as that, up to $50 billion a day, right? And we cover the whole spectrum of customers, from banks all the way to asset managers, all the way to brokers. So what happened in 2018 was that a big part of that, let me just say 40% of my client base were trading digital assets already, and they were the proprietary trading firms. Some of the biggest names, or futures traders you'd see in Chicago and around the world, they were trading crypto assets, and they wanted to do it with institutional grade infrastructure. They did it with us. So the core thing we do is provide liquidity and match buyers and sellers. Now, what was different with crypto as opposed to fiat, so I'll say 90% of our volume every day would be in fiat, was I didn't have prime brokers. So what I do in foreign exchanges is I match buyers and sellers, and then I send the trades down to a prime broker or to a bank who aggregates those trades, settles them. Guess what? I couldn't do that in crypto. So we had to integrate directly with the blockchain. So guess what? We had to settle, we had to pay 24 hours a day, 7 days a week from 2018. We've been doing that. The next bit, in my core business, in my TradFi business, the customers deposit funds with us, but they don't deposit them with LMAX Group. They deposit them into a bank account with LMAX Group. Right? I've got over 170 Nostro accounts across 17 different currencies in TradFi. But they're all, G10 banks, G10 bank accounts. Guess what? That doesn't exist either in crypto. So people want to deposit Bitcoin with me or with Ethereum with me, then I have to store that somewhere. So we built our own custodian. So if you like, since 2018, I have been storing, settling, matching, and providing liquidity to institutional clients. So for the last 7 years. But doesn't mean, by the way, that we always expect to be every part of that chain. I now have a digital custody hub. So we integrate with some of the best custodians in digital assets. If my customers want to use those custodians, we're very happy for them to do that, as long as I can transact and settle with those custodians. So we do that. I'm very, very hopeful that the logjam in institutional markets, that is credit, will be solved by some really big names moving into the prime broker space. Because again, our core business is to match buyers and sellers. So I'd be very happy that a customer onboards with two customers on board with me. I match the trade, and they both with the same prime broker or with different prime brokers, and that settlement happens between those two prime brokers. So I hope down the line that we can get to that true separation of function again and segregation of funds, and we can go back to doing what we're best at, which is building world-leading proprietary technology. All my exchanges are 100% proprietary, right? So we've been doing that since 2010. So I want to focus on that, and then creating the best liquidity pools in the world. I think there was a survey out recently that said, LMAX Digital has a multiple of the liquidity you see on all other digital exchanges around the world. So that's what we do well. We match buyers and sellers well, and we create deep institutional liquidity pools.
You mentioned setting up Nostro accounts, and I've studied Nostro and Vostro accounts around the globe. It seems though there's a lot of capital just locked up there. Do you think stable coins or some form of tokenized fiat, it will eliminate the need for that because you have instant settlement and instantaneous transactions?
I'm a total believer in that. But what I would say is, please don't be telling me that stable coins today are more efficient than fiat. That's one way to destroy value, right? People talk about crypto and digital assets being a store of value. Okay, pay me interest, right? There's over $230 billion of stable coins today, and you know who the big names are. Pay me interest. I'll happily hold them. But right now you just destroy value, right? So, okay, we're probably back to regulation. So, okay, let's get them regulated and pay interest. But absolutely, over time, you will be earning interest on a second-by-second, minute-by-minute basis on tokenized assets. Now, those tokenized assets might be, currencies, money market funds. So at the moment, what has to happen, unfortunately, with the stable coins is I have to put it into a money market fund, and those are quite small, right? Again, $1 billion is sort of the biggest tokenized money market fund today. I've got to put it in there to somehow earn interest. But over time, if I can earn money in my UK gilts, my US treasuries, I expect, or in my bank account, I expect the same to happen with digital assets, or tokenized assets and stable coins. So absolutely up. But I think that's the whole point, going back to an earlier question, Tony, about accelerating the money flow that we see in capital markets today, and leading to an explosion, actually, of all trading volumes in capital markets, is because of the power of that fungible collateral. So being able to move your Bitcoin, your dollars, your Ethereum into other assets at, the click of a fingers. So that means you can trade the S&P Monday to Friday, and then you can flick that into Bitcoin, Ethereum over the weekend, or you can stake that in DeFi over the weekend, and then you can move it back into Eurodollar, or you can move that back into UK gilts or US treasuries on Monday. So, 24/7 market access and acceleration of capital markets is what we should be looking for. And, people really will be getting more bang for their buck and being able to sweat their assets more efficiently than they can today.
Now, you mentioned you work with a lot of the banks globally, and we're seeing some of the biggest names coming out and talking about crypto now. They want to launch services. Just here in the United States, Bank of America's CEO said they want to launch their own stablecoin. Standard Charter's been partnering with a lot of folks. And, what type of demand are you seeing, within maybe the past year or two from these banks? And has that been growing? Are they coming knocking at your door saying, hey, we want to participate? Have you seen that increase?
Yes. So, look, I think the increase is notable since the November election. That's clear. So a lot of the biggest banks in the world are in the United States of America, right? They were slightly hamstrung by regulations such as SAB 121, such as all the enforcements the enforcement actions in place by the SEC. So I think that's all been freed up, certainly since the inauguration in January 2025. All of a sudden, the banks are enabled. Now, don't get me wrong, they haven't yet been enabled by the Fed, but they're starting to think about the services and, quote unquote, I trade with the top 40 banks in the world trade with LMAX Group. So, quote unquote, from one of them at the event I was at just 2 weeks ago, listen, when we trade, we're going to trade with you. Why? Because it's the same tech stack, right, that they trade TradFi with. Right? It's exactly the same technology, exactly the same API. We've been trading with them for 15 years. It's just a different IP address, right? So that trusted institutional partner is where we come in. But it's the trust, it's the technology, it's the regulation, it's that credibility. So suddenly, some of the conversations are educate us. Some of them are more specific. How do we partner with you on custodian? What's the best practice for custodying assets for our customers? Some of them are, what's the best way to start up an agency business so we can offer spot crypto trading for our customers? Some of them are, how do we interact? How do we accept digital collateral deposits? Some of them are, how do we offer wealth management products? So I think there's a whole range, but what I would say was that in 2023 and the first half of 24, the conversations had almost slowed to a halt, right? 2021, the last sort of bull run, every bank was readying themselves. I think that died away in 22, 23, and the first half of 24. They have now been re-enabled. It won't be quick. I'll say that to you now, Tony. It won't be quick, but I imagine that a handful of banks will be offering spot crypto services to their customers by the end of this year. And by the end of 2026, I would expect double-digit banks to be offering crypto trading for their customers and crypto custodian services, or certainly digital asset services. So I think it's going to happen quickly. There's a few dominoes that need to fall into line. We still need the official regulation. The first bit's going to be stablecoin, of course. So we need that to fall into place. We need the Fed to approve the holding of it for those particular banks. And then we need the banks themselves to partner or create custodial services and prime broking services. But look, again, I use that word a lot, inevitable. It's inevitable that the largest banks in the world, some you've mentioned in your question, will be offering crypto services this year.
Wow. And then with LMAX, can the banks plug into LMAX's infrastructure, so to speak, where it's like kind of white label, maybe they're offering the service on their front end, but you're actually powering the trading?
All of that's possible, and we're having those conversations today. Because look, we've been offering it, full service since 2018. I said to you earlier, I don't believe one entity should be offering all those services. Don't get me wrong, banks can, because you have the state and church idea within banks. Or within a group such as LMAX, you just have different regulations. So, for example, the United Kingdom, I have one regulation from the exchange business, and I have another regulation for the broker business, as it should be. So, yeah, we're looking to partner with the banks for some services. my focus is on exchange matching technology. Some of them come with excellent balance sheets, huge balance sheets, which means they can deliver a much bigger and better custodian service, a much bigger and better clearing or prime broking service. So absolutely, we're looking to partner with some of the biggest names to accelerate this growth in tokenized and digital assets.
Talk to us a bit about institutional DeFi. I'm familiar from a retail perspective doing small DeFi transactions, and DeFi 1.0 had a lot of exploits, a lot of hacks and things like that. How are the institutions approaching this, and how are they looking to mitigate things like that happening to them as they transact?
I mean, that's interesting. I mean, watch this space. So, we've built a hybrid decentralized exchange here at LMAX Group. Smart contracts are actually quite simple, right? And if they are simple, I can read them. Put it that way. They must be simple if I can read them. Okay. So a lot of the security risks go away just with the simplicity of those smart contracts. Now, I think how the institutions are looking at it as a more efficient way of settlement, right? And in many ways, settlement risk disappears. Talk to everyone in crypto today. Unfortunately, they've reintroduced settlement risk, right? Because it's like DVP. Someone goes first and someone goes second, right? So you introduce this thing called stat risk, which disappeared, which was named in 1978 when Bank of Stat went bust, and then it was solved in the FX market through the creation of CLS some 24 years later. So that risk exists, right? So that settlement risk exists in crypto today. Smart contracts and DeFi do away with that. So a lot of them are looking at that as a mechanism, again, to put it simply, to speed things up, right? To accelerate the movement of funds. I don't think a lot of 1.0, as you say, DeFi was very much everyone trading with everyone and not knowing each other. I think that's very unlikely from an institutional perspective, and actually doesn't pass FATF guidelines. It's just as simple as that. You're not going to get past AML muster with 1.0 DeFi. But the best bits of DeFi, trading anything, anytime, anywhere, right? And eradicating settlement risk and credit risk is immensely powerful. I think that's how it's going to be harnessed. I believe you're seeing that internally in some banks already, right? You mentioned one bank mentioning their own stablecoin. That already exists within JP Morgan, for example. But you're going to see that amongst institutions where we start just settling and moving funds on using smart contracts. So I think that's going to be a big transition in the markets, but you're not going to be able to get away from KYC. I'm very hopeful again that we can develop zero knowledge proofs and move to more digital KYC onboarding than we have today. But for now, that's what's slowing us down, and that's what's slowing down institutional DeFi adoption.
That's such a great point. I didn't think about it. The banks are not going to operate outside of KYC, AML, and knowing who they're transacting with. So do you see that, amongst the banks globally, they can do DeFi transactions, JP Morgan with Standard Chartered, wherever they're at, right? UBS and this bank in another country and things like that?
So, yes. The question is whether they need it, right? Remember, they have huge credit lines with each other, right? So it makes it more efficient. Remember, the benefit of the smart contract, the benefit of that settlement is for instantaneous settlement, transfer of ownership. I'm not sure that group of banks need that so much today because they just need ledger entries, right? They have enough credit with each other. Ledger entries, the ability they have, though, to actually have digital dollar in their own ledger T0 rather than T+2 is advantageous. Again, it frees up the credit behind that. So I'm not sure they need it per se, but certainly it should add to the velocity of money. I think if you look at that matrix, top 20 banks in the world, there's a 400 square matrix where they all have credit with each other. Just outside of that, I think is where the smart contracts become useful. So it's clients of the banks depositing funds, depositing digital funds, and transacting immediately with those banks, and having that instantaneous transfer of ownership is hugely beneficial and will add to the velocity of money. So I think it's there. I think it's in the asset manager segment particularly. I think you move into the broker segment, that becomes hugely powerful. And again, back to what I said, it's just speeding things up, making faster payments, faster money, right? Making everything more fungible, making everything sort of removing the friction, right, from those markets. So that's what's going to happen. I think that's the advantage of smart contracts. And I think you're going to see a lot of settlement happening using that mechanism in the years ahead. But we're not quite there yet, and we've just got to keep increasing the ecosystem. So if you imagine, that you're at the center of an onion, you've got to go all the way out to the outer layers of the onion so that everyone who transacts in that ecosystem can utilize the power of those smart contracts. And if you think about it, it just frees up credit. And then once you free up that credit, once you transfer ownership instantaneously, then you provide greater facility to trade again. So back to what I said at the start, I mean, you're going to see trading volumes and the sort of the amount of money that's transacted every single day be multiplied in the decades ahead.
It's exciting, a brave new world. I know we're coming up on time, but I wanted to ask you about altcoin ETFs, because Bitcoin ETFs, as you mentioned before, the most successful ETF in the history of ETFs. Ethereum ETFs did okay. I think the staking component being missed or missing from the ETF here in the United States, at least, didn't give it as much inflows. But there's demand for Solana, XRP, and other assets. Are you seeing that demand from your institutional clients? They want access to other things beyond Bitcoin?
Honest answer, no. Okay, so that's today. In the future, ETF of everything. ETF of everything, every asset that is significant in the investment community needs to have an ETF. But remember, Bitcoin and Ethereum today are what? 75% of the total crypto market. So do you need everything else yet? I'm not sure they're significant enough. And look, before everyone, shouts at me and hits me over the head and says, David, this altcoin's amazing and Solana's amazing, whatever. You say, look, 75% is $2.2 trillion, right? So you've pretty much covered crypto, right? Crypto is just short 3 trillion. Remember, the ETF world, or the TradFi world, is 220 trillion. So it's quite small. Over time, I think what's more important is the step before that. We have got to make some more digital assets, some more crypto assets, more useful, have more utility, and prove their worth. I think when you look at it by pure value, I'm just doing it based on data, ladies and gentlemen, right? Don't hit me over the head. Just on pure data, today it's Bitcoin, and today it's Ethereum. But tomorrow it could be, a whole raft of coins. And if you go back to where I started, I expect digital assets to be $30 trillion by the end of this decade, right? I expect them to be over $150 trillion by the end of the next decade, which means you're going to have a lot of digital asset ETFs. Yeah. So, yeah, that bit is inevitable. Short term, you're going to have some that don't work out, right? Just the same way you're going to have some. These are all scientific experiments. So some of the underlying coins aren't going to work out. Some of the ETFs aren't going to work out. But as sure as eggs, you're going to have ETF on digital assets going forward.
Great point. All right, I got some wrap-up questions here for you, David. First, if you could create your own metaverse, what would the theme be?
That's interesting. I'm not even sure I play that much. I'd probably be, look, I'm a sort of global guy. I like, wherever I go, I like running and things like that. So it's going to have to be a running or a cycling or a golfing metaverse where I can just be anywhere in the world and do what I like doing, and at the same time be able to transact in those markets whilst I run or cycle or play golf there.
Okay, rapid fire questions. Favorite food?
Japanese.
Favorite musician or band?
David Bowie.
Favorite movie?
Rocky 2 or 3.
Favorite book?
The Long Walk to Freedom, Nelson Mandela.
When you're not working at LMAX, what are you doing for fun?
Playing golf, going for a run.
David, absolute pleasure. I appreciate your knowledge and insights, and I would love to have you back on. Thank you so much for joining me.
Thanks, Tony. I've enjoyed it today.